In this video, guys, I'm going to look at the pros and cons of being a trend trader. Stay tuned. Hey traders, warm welcome to you. All right, so one of the problems I have with, that sounds like a really extreme thing, but I don't really have a problem, but one of the issues I have with some of the old books, and I've got a kind of bookcase as well with lots of trading books, so some of the old books is that, some of the older traders, if you like, really had a trend trading methodology. They would look for strong trends. Turtles are a great example, and the trends would be there. And some of these guys have been around years, and of course they've adjusted their mentality and way they've traded a little bit more, but it made obscene returns trading on these trending environments. So they found a trend and they rode this thing for months and months, if not years, because the trends were just completely different. The markets were different. Now, it's a separate topic to talk about why the markets are different. We could argue that it's the algorithms. We could argue that there's easier and faster access to the markets. Let's forget about that for now. Let's look at, if you're a trend trader, what are the pros and cons? So many traders who I talk to say, hey, I've read this book, and quite rightly, a lot of them talk about how to jump on trends. They talk about, if we're buying a breakout, we stay with it and this and that. And they say it's not working for me. It's not working. I keep getting stopped out on this. And my reply generally is this, is that, hey, at the moment, if you're a trend trader, the biggest downside you have is that there aren't that many big, strong trends out there that don't have key shakeouts at some point. Now, you could say, hey, Mark, what about the US equities bull market? And I would agree. But even that has had plenty of shakeouts, which would take out, a lot of people who are not necessarily investors, because investors aren't leveraged up, but traders that say leveraged up, you're trading a futures contract, trading CFD, or whatever it may be, you're probably 4 or 5 days of down move that's taking you back 10%. It might well get you out, or maybe get you hedged and affect you a little bit. But if we put that to one side anyway, there aren't that many big, strong trends out there. We get them from time to time, but they're interspersed with, shock liquidity vacuums, like we see in the US equities. We have multiple events, guys, where even though we've come up a massive way, we've had these shock events that have just ripped the face off any longs who are late to the party, and then it's kind of chugged back in. So very different environments. Now, again, someone could argue, well, what about commodities? Look like sugar from years ago. There are multiple downtrends. Yes, there are some out there, and of course, there are going to be exceptions to the rule. However, very often, guys, especially in currencies as well, or the major currencies, we do not have these long, clean trends. Now, we might have trends that go up and down and eventually go from here to here, and if you're just marking the highs or lows, it's a trend. But the very nature of them is very cyclical. You get, lots of up moves and down moves, and those techniques that were very powerful years ago, I just don't cut it in the modern markets. Now, that's not to say you can't trade as a trend trader, and we'll talk about some of the pros and maybe some of the ways to attack it in a second, but just be mindful that those chugging trends where you just get every day, no heat, relaxing, add to the position, build the position higher, they're very, very rare. And so that's one of the struggles and challenges, is trying to find these. Now, of course, there's individual stocks out there, etc. But again, they reverse very quickly. If you're not on the case with it, they can reverse quickly. They have these brutal pullbacks that you have to accommodate. But that can be something to your advantage. So look at the pros. So the cons are, we don't get as many clean trends. Arguably, there'll probably be somebody who'll show me many charts where there are, but arguably it's not the same kind of environment. So that's a con, and we don't get them as much. But the pro is that if you are a trend trader, you can still use that and that reference point and way of trading, but tweak it a little bit. So you can literally say, right, I'm going to identify a trend. And of course, the biggest pro, which we kind of overlooked here, is that your risk reward is huge. You don't have to do anything once you're on a trend. If you identify it, you can ride that thing for as long as you like. Now, of course, identifying where the end of a trend is versus just a shakeout, that's a different kettle of fish. Tricky scenario, that's one of the cons of it. You can get shaken out by something that's literally the first pullback of a next 4-year cycle, and then you're in trouble because do you chase it again? How do you play it? But anyway, back to the pros. So pros are, of course, you can get on a lot of big moves. But the other thing is, if you're a trend trader, you can still utilize, and some people call it, go to the dark side a little bit and grab some maybe shorter term strategies, some mean reversion type things, but use them with your trend. So for example, rather than the traditional trend where you're just buying new highs, you're buying kind of slow pullbacks, maybe you can look to use some of the tools from the mean reversion guys out there and say, hey, you know, how do I trade it? Okay, well, I look for a double bottom in this kind of scenario. Maybe I look for a stretch on a Bollinger Band or a Keltner. Maybe I look for kind of some sort of support, but align myself only with the trend. And so you use that to add to your positions. You say, hey, this is my trade. I'm going to have a core theme of a long because it's an uptrend. I'm going to have a trading stop that has to be a little bit wider because, like we just said, you know, some of these kind of pullbacks and snaps and challenges to the trend are quite harsh in some cases. But I'm also going to use those rather than looking at them and going, are these going to shake me out? I might look at them and go, actually, I'm going to use this as a nice tool to get into the trend, whether it's an initial position or adding to the position. And so you can align yourself rather than trading just trend trading. You can say, right, I'm going to use that as a theme because when trends are strong, they are strong, but I'm going to use it only as a filter to say that I will only now trade that market from the long side using these different strategies. And that way you get the best of both worlds. You're not stuck in a trend or trying to find a trend. You're not Nothing wrong with being stuck in a trend that's going your way, but you're not stuck in a market that's maybe pulling back, but you're in for the longer term. You can kind of use a little bit of a hybrid model. So you've got some pros and cons there, guys. There's no free lunch as always, but I think that's the way the markets are going. You know, we are unlikely to have a scenario where we have grinding solid trends that just stick for a long time without these kind of liquidity pulls, these news things that hit, because you could argue and guess all you want, but maybe it's because we have negative news hitting stuff that scares people for a bit, and then it kind of progresses back, and the macro effect is what's driving a price. Who knows? But I think that hybrid model is a good way of doing it. If you're a trend trader, that's maybe something to look at. Rather than being frustrated, trying to find the trends, getting stopped out all the time, maybe just stick with the trends, but add a little bit of mean reversion flavor, but just in the direction of the trend that you're trading. It works for kind of all time frames as well. Anyway, guys, take care. Whatever you're doing, keep the risk managed, and I'll see you in the next one. Thanks for subscribing. Bye-bye.